Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Tuesday, January 12th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Tucker Advisory Group, teaching both clients and financial advisors powerful, safe money strategies. For more information, please visit www.tuckeradvisorygroup.com. Now for today's headlines. The U.S. Federal Reserve banks paid a record $46.1 billion to the U.S. Treasury in 2009 after seeing its net income leap by 46.8%. The payment is $14.4 billion more than it contributed in 2008 and is the largest since the central bank was initiated in 1914. In addition, the bank's 2009 net income of $52.1 billion was also a record. The record payment could aid the Fed's case as it continues to battle legislative efforts to limit the central bank's authority and to place it under increased scrutiny. The Fed still holds billions of dollars worth of risky assets taken as part of bailouts. In investment news, U.S. banks with compensation plans that encourage risk-taking would be required to pay more for deposit insurance under a proposed plan by the staff of the Federal Deposit Insurance Corp today. The FDIC board will soon vote on the preliminary proposal, which would encourage pay structures tying banker pay to long-term performance, as well as including quote-unquote clawback provisions to recover payments based on unrealized results. On the other hand, banks with risky payment schemes involving large cash components and incentives for short-term results would be required to pay more in premiums. The proposal is not guaranteed to translate into rulemaking and would not seek to impose a specific level of compensation. In addition, it would not require banks to provide more than a minimal amount of data. According to FDIC Chairman Sheila Bair, quote, "We're not talking about levels, notwithstanding my dismay. This isn't about levels, this is about structures," unquote. In regulatory news, the SEC has expanded its charges against Bank of America over billions of dollars in bonuses paid at Merrill Lynch, saying the bank did not disclose growing losses before a shareholder report that approved the merger. The SEC has announced that it has asked a federal judge in Manhattan to allow it to file the new charges. The SEC and Bank of America are currently scheduled to go on trial on March 1st. Previously, the bank was accused of failing to disclose payment of the bonuses to Merrill employees before Merrill was acquired. This week, the SEC said it would now allege that the bank, quote, "erroneously and negligently concluded that no disclosure concerning these extraordinary losses was required as shareholders were called upon to vote on the proposed merger with Merrill Lynch," unquote. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.